How money actually moves in Nigeria. Most Nigerians think money moves like this: you work, you get paid, you spend, and that's it. But that's only the last step of how money moves in Nigeria. If you understand the steps before it, a lot of things will finally make sense. What most people experience is simple: companies pay salaries, people spend money, banks keep their savings. So when money feels tight, we assume the problem is personal. Maybe I need to hustle harder. Maybe I'm just bad with money. But what we experience daily is only the surface layer of the system, not where money is created or directed. In Nigeria, new money enters the economy through the Central Bank of Nigeria. The CBN controls how much money circulates, interest rates, and how expensive borrowing becomes. Money doesn't increase just because productivity increased. It increases when credit is created, mainly through the banking system. When the CBN changes policies, it affects how much banks can lend, who can borrow, and at what cost. This is the first layer, and most people never interact with it directly. Commercial banks are not storage facilities, they are financial intermediaries. When you deposit money, banks don't keep it idle. They use it to issue loans, invest, and earn interest. This is normal banking practice, not corruption. But here's the key detail: banks lend more easily to low risk, large borrowers than to individuals or small businesses. That is why banks remain profitable during economic stress, savings interest stays low, and access to credit feels unequal. Your money is active in the system, just not on terms you control. A large share of money in Nigeria circulates through government spending, public debt, major contractors, large corporations, imports, and infrastructure projects. These players operate with scale and credit access. They borrow, spend, repay, and borrow again. By contrast, salary earners mostly receive fixed income after prices are already set with limited access to affordable credit. This difference in timing and access matters more than effort alone. This is why income often lags behind prices. Inflation adjusts first at the system level, in fuel, imports, logistics, and wholesale markets. Salaries adjust later, if they adjust at all. So even when income rises, purchasing power may not. This isn't unique to Nigeria, but it's sharper here due to currency pressure and import dependence. It's not that workers are unproductive, it's that prices react faster than wages. Understanding how money moves doesn't guarantee wealth, but it gives clarity. It separates personal financial decisions from structural economic forces. That clarity helps people plan realistically instead of blaming themselves for things outside their control. When you understand systems, you make calmer, more informed choices. Money in Nigeria doesn't move randomly, it moves through institutions, policies, and incentives. Most people only interact with the final stage. This channel exists to explain what comes before it. If you want a clear, grounded explanation on how money works in Nigeria, subscribe and I will break it down one system at a time.